Welcome back. We've got a really interesting talk for you today. This is ICO versus VC. And I know it sounds like a fight, but it's not. It's a friendly discussion, and we're really talking about the differences and the strong points of each and maybe the demerits of each as well. So we'll open it up, we'll talk about those things, and then the last 10 minutes or so, we'll let you guys ask a few questions to the panelists. And I guess we can introduce ourselves first. Me, I'm Abasa Phillips. If you hadn't seen me yet, I've been in Japan for 15 years, been involved in crypto since 2011. I've raised money from angels, no VCs yet, and for other startups, and I run a company called Zilla. We're an ICO marketplace, and we recently, a few months ago, we raised $16 million. So I have my own perspective on that, but today's not about me. It's about these guys. So I'll let you guys introduce yourselves.
Hi, hello. I'm Noritaka from Grassroots. Let me introduce my company briefly. Actually, we did the first ICO in Japan. It was July 2016, and they succeeded to raise about 6 million USD. And then we generate a new cryptocurrency called Koban, and it's a new type of blockchain. We tied up with the cryptocurrency on the advertisement. It's like a reward model advertisement with blockchain cryptocurrency. And then now, after ICO, we did already release our services about a year ago. And then the unique, remarkable result is about for example, the number of transactions on our blockchain is about 1 million per month now. So now it's a growing phase for us.
Thank you. How about you, Mark?
Hello, Mark Bivens here. My background's actually quite brief if I leave out the dirty parts.
Keep those in.
I started 3 companies back in the 90s. One of them I got lucky with the dot-com boom. The other 2 were total shit failures due to mismanagement by the founder, who was me. And then after that, for about 15 years, I've been a venture capitalist, went to the dark side, and mostly in Europe. And more recently, I just moved to Japan, but I have a large fund in Europe and then a small fund in Japan, and I'm trying to figure out how blockchain is going to put me and hopefully my partners first out of business.
Great. Marina.
Hello, my name is Marina. I'm head of ICO advisory at NKB Group, which is a blockchain-focused investment bank. And my background is traditional investment banking, so I used to work at Morgan Stanley and Nomura, where I raised billions of dollars for clients in traditional IPOs and follow-on offerings. And about 2 years ago, I moved into blockchain space, initially as part of Argon Group, which was probably the first investment bank in the space. I advised on some of the, groundbreaking would be probably too strong of a word, but deals such as Blockchain Capital, which was probably the first security token, Storage, Civic, and several others. Yeah.
Thank you.
Hi, everybody. My name is Stephen Nerayoff. I'm the CEO of Alchemist. We are in a blockchain advisory firm. And I really appreciate this topic because it kind of brings 2 worlds that I've had in my life. So in 2007, after starting a number of businesses, mostly in tech, I started my own venture fund. I still have that. And I've done those mostly in technology. And then when blockchain came around, I got involved in around 2011. I found my next love, and I've been very fortunate because the first ICO that I was involved in was Ethereum, and I was charged with coming up with a legal structure for the Ether crowd sale, and we've involved in a few dozen ICOs since, and the most recent one I'm also honored to say is which one the security token, and it's a T01. So in any event, thank you.
Thank you. Mu.
So hi everyone. I'm Mu. I'm from Bangkok, Thailand. So I've been entrepreneur for almost 20 years. I found a company called Ukpi, and then Ukpi have been raising around 30 million US dollars so far from strategic VC, including Transcosmos in Japan and Tencent from China. 3 years ago, I found a Thai fund called 500 Tuk-Tuks, which is part of 500 startup from the US. It's a micro fund which we invest around 50 companies. Most of them are in Bangkok. My first investment in Bangkok is Omise, which is OMG coin. And now I am launching my own ICO called Six Network. Yeah, so that's what I'm doing. Yeah.
So question, Mu, for your Network, why are you doing an ICO rather than raising from traditional investors?
So we consider this as the utility token, and in a way it's like my company Ukpi. So we have a JV with Tencent, right? So we have 50-50 with Tencent. Under this umbrella, we have around 350,000 creators. Most of them are writers, musicians, and comic artists. And we have been issuing our own internal tokens, right? So in Southeast Asia, when people buy this digital content, they use micropayment. So they like SMS through telcos or like scratch card, and then they convert this to tokens, and then they've been spending. The size of the token is very small. Actually, it's like 10 cents US dollar or something like that, and spent in the ecosystem. So I was having an idea of using this crypto token back in a few years ago, but in that time, the concept of issuing tokens to this creator is not making sense. Not until last year when people starting, like in my ecosystem, start to know about crypto things. So then it's ready. So that's why I think I should have I should try.
I see. So it was more a technological reason rather than sort of a business decision. And you mentioned 500 tuk-tuks you guys invested in Omisego.
Yeah.
Did you invest? If this is public, was it equity or was it?
It's equity. Yeah. So in back then, Omise was like doing at the beginning they were doing a Shopify clone. So that's why it's called Omise.
Right.
Yeah, and then we found out that actually only the payment feature of Shopify is big enough. Yeah, like so it's like Stripe. Yeah, Stripe. So they will become a Stripe of Asia. That's what their ambition. And then that's way before the Omisego.
Right,
yeah.
Right. I see. So you were looking at them before Omisego, but when they started doing Omisego, you decided, okay, we should invest in them.
Yes.
Interesting. Okay.
Oh no, I invest back in equity.
Oh,
yeah,
back
yeah,
then.
yeah.
Oh,
I'm
I
the
see.
first investor. Yeah, in equity round.
I see. Oh, okay. And Nori, so you, for Koban, you guys did an ICO. You raised 6 million. You were very early. That was 2016.
16 July.
And why did you do an ICO rather than speaking with VCs?
So I felt big wave on the cryptocurrency. So the first company for me was in Singapore, and I set up about 4 or 5 companies in Singapore or Indonesia. It was a kind of a legacy IT service like e-commerce. But after that, I decided to come back to Japan. Then if I start this company, I decide to choose the big wave, big trend. So that's why I chose the cryptocurrency. So, and then I want to do both simultaneously, VC and ICO.
Yeah.
But ICO first. It's because the value of coin depends on the number of users. That's why I have to figure out the scheme that we could use as easier. In 2016, we see only trade on the marketplace. Everybody talk about going up, going down. That's all. But the blockchain technology itself is much more appealing to change the world. That's why. So I try to figure out our business model where we could get users easier than opening the exchange market.
I see. And for Mark, has your fund invested in any companies that are doing an ICO?
So that's an interesting question. I would say the official answer is well, the current answer is no. Probably in a year, one of my partners has a few investments that can't raise money.
Mm.
And so he's suddenly attracted to ICO. He just figured out what an ICO was. I make fun of him all the time. But so possibly in a year, we'll have a couple companies. And then the way that VCs in general, especially us, we tend to rewrite history. 3 years from now, we'll look back and say, yeah, look at all these ICOs we invested in.
Right. So is there a reason that you're not investing in ICOs at the current time?
Yeah, so there is something, this is changing, this is shifting, and Marina can talk about this too, but venture capital funds traditionally usually are structured as limited partnerships, and they have limited partnership agreements that actually do not allow for investment in tokens. They are quite restrictive. It's certainly the case with European venture capital funds. However, this is actually changing, as I mentioned, in a couple ways. One, you have, of course, ways to invest in equity that's convertible into tokens. There are a number of VCs in Europe, at least now, that are renegotiating their limited partnership agreements to allow for token investment. But directly though, to answer your question, we're really fascinated by it. Of course, we tend to believe that venture capital financing is going to be important even for companies that pursue ICOs.
Right.
But it is pretty interesting to us.
I see. For Marina, so you were with an investment bank before, and then what was it about crypto that made you kind of get interested in the space, and how did you make that jump?
I really like how the technology is really changing everything that we are looking at. As we all know, specifically to raise funds for startups was really, really difficult a few years ago. You really had to be mostly in the Silicon Valley, and that's probably one of very, very few places to be in. And the ICOs have completely disrupted that space. I completely agree with Mark that there is still a very important place in that ecosystem for VCs. But then I also see VCs that, for example, last summer were completely discounting investing into tokens, have either started to pursuing those route of investing into equity, converting to tokens, or changing their LP agreements. And there is generally a lot more understanding among them for this new asset class.
So, I mean, I guess what I'm really trying to get at was, it seems to me that, when I speak to VCs, there's a certain level of belief in the technology, but there's a hurdle that they're not getting over for some reason. I'm really trying to figure out what exactly that hurdle is. And Steven, you invested in, or you were a part of the Ethereum crowd sale. I remember those days. I remember Vitalik going around and doing his roadshow, hearing him talk. And even for me back then, it was quite a hurdle. I remember listening to Vitalik, and what he was saying was completely over my head. And it seemed like such a stretch from even Bitcoin. What does it take for someone like you to get involved in Ethereum that early? What was it that brought you over to that side?
Well, I was very, very fortunate that I saw Vitalik's white paper within about 2 weeks after he wrote it.
Wow.
And when I saw it and I saw the smart contracts and what they could do, it was just a light bulb just went off. It was one of those aha moments, like, oh my God. Bitcoin was fascinating. The blockchain was fascinating, but it just didn't do much.
Right.
Right. It was just kind of there, and now all of a sudden it was like an operating system was implanted into this thing that we knew was. We didn't use the word blockchain back then, right? We just called it Bitcoin.
Right.
And so now it's this operating system where you can create all these great applications on. And so it was just the world, your imagination. It was an exhilarating moment.
Right. So it was the technology behind smart contracts rather than the Ethereum cryptocurrency in and of itself. that.
Absolutely, yeah. It was, no, it was very, it was the tech. It was and it's important to remember that we raised $18 million, and that was over a month, and we did a 5x more than the next closest crowd sale. I mean, we were on like top of the world.
Right.
There was another crowd sale that another company that I'm a part of called Bancor, and we raised $150 million, and that was also 5x.
Right.
So I mean, but by that time, as opposed to the earlier days, we were really raising money and calculating what we needed for use of proceeds.
Mm.
You know, it was very traditional VC. It was like, how much money did we need?
Right.
How long did we think it was going to take to
Right.
build the product? We were not thinking about, we're going to get this Bitcoin, and this Bitcoin is going to go up. In fact, what happened was it dropped in half right away. We got it at 500, it dropped to 250.
Right.
So we were basically, anybody tells me they need $100 million in an ICO, I kind of laugh because Ethereum was built on $9 million.
Right.
So it's hard
That's a
to
good point.
fathom that you need more than that. And the whole protocol was built, and Ether was issued. And importantly, unlike today, where what Patrick was saying earlier, where you get this discount and you get the token right away, there wasn't immediate gratification back then. We took the money in, and we built the technical team built out the protocol, and the Ether wasn't issued until the protocol was actually working.
That's right.
And it was actually functional, and you could, at a minimum, you could send Ether, using gas.
Right.
So that was it's a big change. And today, the concept of it was really looking at it as like a seed A round, as opposed to today when I talk to so many people, and they want to do their seed A, B, C, D, and go IPO all in their ICO. And it's like, well, no, hold on a second. First raise what you need to raise here, prove out your product, and there's going to, in my opinion, be a wave of secondary ICOs where people will have issued one, and it should be natural. There's secondary offerings for securities on stock markets. So there'll be secondaries, and you're seeing a couple of them doing that now. With the tokens that they held back.
That sounds fantastic. I'm biased, but that sounds cool. When you guys were raising money for the Ethereum crowd sale, did you approach VCs?
Yes. In fact, the strategy was very much, we knew that we could raise a certain. We were confident. I shouldn't say we knew. Something really important is that there was a big team that went all around the world. There were 50 meetup groups by the time this crowd sale started. So we spent a long time really planting the seeds all over the place. So we got 2 offers from 2 of the largest Silicon Valley venture funds at a very, very high valuation, triple-digit $1 million valuation.
Wow.
And just about the amount of money that we ended up raising. But at the end of the day, speaking of this particular topic, the general feeling was amongst the founders that they wanted to be much more autonomous. They did not want to be under the finger of a venture capitalist. They did not want them to be told what they needed to do. They had a vision. They wanted to execute upon that vision. There's a lot of disagreement within the ranks, but at least it was within the ranks that they got to make that decision. They didn't want some Silicon Valley firm, several thousand miles away, telling them that no, you need to build Ether like this, or you need to put this programming language in, or that programming language.
Right. When raising from a VC, I mean, the expectation is of an exit, right? And for something like the blockchain space, I see many companies where I don't really see an exit, but it would be nice that the protocol or whatever that they're building exists. So I think that's definitely one of the merits of doing an ICO rather than raising from VC. But yeah, how do you guys feel about that, Mark?
Well, I think the joke that we were saying before the panel was, I don't know if anyone's had the misfortune of going to Texas in the audience, but I'm just kidding.
Not that bad.
It's not that bad. There's a barbecue ribs chain called Tony Roma's. They're all over the U.S., maybe even outside the U.S. But my uncle, who's a big ribs fan, he used to say when the waitress asks what kind of ribs you like, St. Louis or baby back, his response always was, why not both? So I guess that's, ICO or VC. Actually, I think a better analogy is the ICO is kind of, I see it as a, more power to you. How many people have raised an ICO already? Or it's in progress? Okay, a fair number. Raise your hand, Abasa. That's fantastic. I see an ICO kind of as the fling, the weekend fling in Ibiza, whereas with a VC, it's more like a long-term marriage. Both have...
But there's always a divorce because they want an exit. So.
And there's always an exit. And Stephen mentioned many people don't want Silicon Valley VCs breathing down their necks. I can understand that. Back in the 90s, they walked around like they owned my company. And after I missed a couple milestones, they actually did own my company. But the thing about, well, first, we're not in a steady state. So there's an opportunity to take money, fantastic, go for it. Then I would recommend for those of you that have made the window, and maybe the window's still open, I hope, take those funds and set aside a big chunk of them like they're in endowment. Like what Norway did with its oil reserves. Be like Norway. Maybe even put it in a currency in which you will have a lot of your operational expenses, be that dollars or yen or euros or Bitcoin if you pay your employees in Bitcoin. But be like Norway, don't be like Venezuela with that money.
But they're doing an ICO as well, actually. So
because they weren't like Norway, right?
Right.
Or be like Wakanda.
Right. There we go.
But there's another element too, which is liquidity and exit. And indeed, a VC wants an exit.
Right.
And the beauty of a coin that's tradable is there's liquidity. And a lot of people tout that as a benefit. And it is a benefit, but it can also be a burden for the issuer, the person who has to provide that liquidity. Why? Because every day or hour or week, people are looking at your coin price, and it's a distraction, including your employees. Whereas VCs, they are in it for the long term. They have a 10-year horizon. They commit. Our investors understand that they won't get liquidity from us for at least 10 years, sometimes 11 or 12 when we give them stories. So there's no risk. We're going to push you for an exit, but there's not really a risk that we're going to pull out or liquidate because nobody will ask us to or force us to, which is an important difference, I think, in the model.
Is that a function of the difficulty to liquidate, or is that a function of a commitment? Right, because with tokens, I mean, if a token is on various exchanges, it's just easy. So if you were a VC and you had tokens, would you liquidate, or would you, I guess it's case by case, but I mean, you tout, VC staying in for the long term as being one of the benefits, but I don't know. I mean, if VCs really could liquidate faster, I think they might do so. I don't know, Marina, how do you feel about that?
I think specifically on the liquidity front, the VCs that I have seen coming into my deals, they were actually mostly also long-term holders. For them, they come in for a longer term. That's why, for example, when we're now doing some of the deals that come with a SAFT agreement, right, which comes with a 1-year lockup effectively. Many crypto hedge funds do not really want to hold that long term. They want liquidity much more near term, while the VC funds, for them, it's really nothing. But I also wanted to add to the points that Stephen and Mark has made. Yes, I understand some of the founders who do not want to be controlled by a VC, but I think if you find a good VC, it can give you a lot of support and mentorship and assistance with various, I don't know, introductions, business developments, and things like that. So I wouldn't necessarily discount that. I would actually value that. And so that's why I believe more of some sort of symbiotic relationship between ICOs and VCs when VCs come into ICOs, but then the ICOs are also able to take the best of both worlds, right? So again, there was mentioned here about funds in escrow or funds released to the team depending on some milestones. I strongly believe in that because I have seen teams becoming not really disciplined or not really able to deliver just because there's too much money, too many people to hire, and that whole business, the whole execution becomes challenging for them as well. So yes, best of both worlds. That's my opinion.
Okay. And Mu, so you're wearing both hats as an investor and someone doing an ICO. What do you think, from your point of view, what's the benefit that the investor or the VC has to offer startups who are planning on doing an ICO?
So just like everyone was saying, but let's look at in terms of for startup first, right? So for startup in Southeast Asia, for example, so there are not so many bigger Czech investors, right? So actually when I look at this startup, like the progress of this company that doing ICO, actually they are similar to seed stage company, which is like in 500 hat, we put like 150K, 200K.
Right.
But when they do ICO, it's like Series B, right? The size of, and then it's the same company, right? When you look at from the investor point of view. But then again, you have to look in, if you look at another way, for more established company that even they got like seed money or even Series A, maybe doing ICO in a right way will help them to raise a bigger check, and when there are some difficulty raising that size in Southeast Asia or in Thailand, for example. So I think definitely having ICO ecosystem in especially in my country definitely help. But then again, too much money probably not a good idea at the beginning stage, right? When you have like few guys and then like so much money in the banks, things may turn different. Yeah.
Right. So Steve, you mentioned when you guys were doing the Ethereum crowd sale, you raised basically what you needed, but VCs valued what you were building is much higher. I struggled with this actually too, and I see other ICOs struggle with this. But how do you value these companies, or how do VCs actually, when they go to invest in them, are they valuing the token? How do you think that should play out?
I don't think the market has found price discovery yet. I mean, we're right in the middle of this, and so it looks like it's been a long process. But in 20 years, when we look back, this will all be just a big blur.
Right.
And probably sometime in the next year or two, price discovery will happen, and then there's traditional metrics or non-traditional metrics, new metrics. So it's not a round peg, square hole will be developed to value tokens. And again, you have to talk about what's the token doing and what kind of. I mean, you didn't have equity in a company that could gain you access to some system. That's just not what equity did, generally speaking. So the fact that you can make do all these tricks, how does that affect the value? And so I don't think we wrapped our arms around that at all.
Right.
And we have a very small, tiny. I mean, if you looked at what John was talking about earlier, and you see how small the market is relative to other asset classes. It's just the price discovery hasn't been able to happen, I think, in part because of that. I think there's, in terms of VCs valuing it, there's a trend that I am seeing though that's interesting, and it's a hybrid. We did a token sale not too long ago, maybe it was last fall. If anybody's heard of Storm Token, and they were a traditional software company that had traditional backers and equity. And during our token sale, there were multiple strategic investors, and I would fancy them to say small VCs almost, but certainly strategic in nature, and certainly, as you mentioned, mentoring, and were helpful. And we sold them equity in the company at the time that the ICO was going on as well. And some of them were interested. It was very interesting. Some of them just wanted the equity. It was only for strategic ones that we thought would be around for the long haul. So I think their thinking is that if you want somebody around, I said the negative before, but now the positive about the VC is, the negative is that he sticks around, and the positive is that he sticks around.
Right.
Right. So, and your token holders, bam, boom, they're gone, and it's the dump of the pump, and so it's not as stable. So, and you're seeing even hybrid models where you're seeing equity being sold in companies that the equity comes with tokens. And so, or you've seen some token sales where there'll be a right to purchase equity in the future. So I think the models are merging, and people are figuring out all these different machinations on it, and to see which ones are working best.
Yeah, it's kind of like theoretical physics. It's like theoretical economics,
It's theoretical confusion a little bit right now.
Yeah. So, Nori, I'd like to ask you a question. You did your ICO, and you also raised $1 million from VCs as well. That was after your ICO. So, did the VCs that you raised from, did they take into account your ICO?
No, equity.
So just equity, but But how did they value your company? Did they include your token value or your market cap of your token?
Okay, let me explain that before that. Regarding to the VC versus ICO, I think it's a different type of pressure is different. ICO is like a public pressure. VC is like internal pressure. Then if we fundraise from the ICO, we have a fund, but our team is not perfect yet. And then we have to develop it, and then the deadline is disclosed. Everybody knows the deadline, and then, but our team is not perfect yet, but we have a fund, so that's why it's a public pressure. On the other hand, the VC, it's an internal pressure. Before getting a fund from the VC, we'll have enough good team, because VC evaluate the team. So then no one knows the deadline. The internal pressure from the VC only. That's why we could concentrate on the development only. So then in my case, I fundraised about 6 million from the ICO, and then it took 9 months to develop all services, including blockchain, wallet, exchange market, and then advertising platform. It took 9 months after ICO. At the time, I felt every day like a public pressure. Every day, the initial investor was not professional, not investors. It's just like consumers. They feel like our coin Koban going up. All they think is only increasing.
Right.
So from 9 months, I fought both develop product and public pressure.
Right.
Every day I was told cheated, before launch product. So then that's why after that I released a product, and then I began to negotiate with the VCs to fundraise to speed up more. Then actually in my case, the valuation of my company, our VC doesn't count in the ICOs or doesn't count in the market cap of coin. They just see like a seed round company.
Mm-hmm. Interesting.
So,
Another question. How long was the span of your ICO? So from the moment that you announced that you're doing an ICO until your public sale, how many months was that?
So ICO also takes 9 months. While I'm developing our product, I keep on the ICOs because I need more fund to finish develop.
I see. And how long did it take you to do your fundraise?
Unlike from VC,
From VC, sorry.
like a couple months, 2 months to finish closing it.
Okay, so it was 9 months or so for your total ICO, and then 2 or 3 months from a VC, and that's $6 million versus $1 million. Which was more painful? Which was easier? I should ask.
In my case, maybe VC.
VC was easier.
More painful. No, painful is ICO. It's because I fought with the public pressure. You know, after ICO, I began to look for team member more to finish to develop it. So at that time, our company is small, only three of me. But now we have 38 staff now. So yeah, I always fought with the public pressure. Although we are very early stage company.
So I have a question for you. I don't mean to put you on the spot, but do you regret doing the ICO, or if you had to do it all over again, would you just raise from a VC, or would you do it how you did it? Yeah.
Oh yeah. No, I don't regret. But I'm very proud of it. Yeah, and I want to ICO again, actually.
Wow, that's great. Okay, I'd like to open it up to some questions. If any of you guys have any questions you'd like to ask the panelists, feel free to do so. If you're okay, over here.
Hey, thanks for sharing. How do you do when it comes to evaluating the amount of money that the project want to raise? Because from what I have seen so far, mostly projects just like propose the money that they want to raise, and looks like the market just buy in. And for some projects, they don't even know like how much they want to raise. They just do like reverse auction, right? They just like take whatever the market is willing to give them.
Right. So the question is, how do you decide how much to raise?
Yeah, well, I usually use my experience from traditional capital markets, right? When you do an IPO, there is always a very clear use of proceeds. There is very clear benchmarking versus other comparable public companies. And I already see some of the major funds doing exactly that, right? There's a little bit more difficult in the space because I think John referred to that the information is very fragmented. But I have seen the funds being able to do very advanced comparative companies analysis. What was the valuation of the comparable companies at ICO, how much they sold, how much the company retains, how much goes to ecosystem development and other use cases, right? And so, yes, so with our clients, I definitely emphasize that they should first and foremost focus on how much they need to raise and plan it in terms of how many developers to build, how long it will actually take to network launch. After network launch, how do you progress? And from that point of view, I'm also all up for having more and more, say, rounds of ICOs, right? You raise maybe a little less initially, and then as you scale and as you are able to execute on your vision, more and more, say, use cases or use of proceeds for the funds appear, right? And that makes sense. And I think we're going to see more and more of that. That's coming first and foremost from investors' side of things, because they really need to see the amounts raised to be justified.
Okay, thanks for your question. Do we have any more questions? Back over here, a couple.
Thanks for sharing you guys' knowledge. I have one question. What's kind of like a startup or application that they should raise money by ICO?
Sorry, could you repeat the question?
Yeah, like what's kind of like a startup or application that they should raise money by ICO? Because I haven't found any of the company they should raise money by ICO, except like accessing the money in terms of the service-wise.
So the question, if I understand it, is what type of company should do an ICO
Right.
rather than not raise money from VC?
Yes.
Okay.
Yeah.
So what type of company is, I guess, the perfect match for an ICO? Steve, I guess I'll let you take care of it.
Well, I think it's not. It's just the company. I mean, it's kind of like, what are your goals? What do you want to do? You know, what's your temperament? What's the environment like? I mean, in the last 2 years, you've been crazy not to do an ICO and go into the VC markets. I mean, it was just money was just being thrown. So I mean, there's just a market mentality. But in terms of the type, you look at the utility and functionalities of the tokens, and the ones that have true utility. Those are ideal ones. So, an access token, for example. The problem is that most companies that I've seen ICO, let's say they've done an ERC20 and the Ethereum network. For the most part, they could have used Ether. They don't actually need a native token. And so I would say, first and foremost, you'd have to ask yourself, do you need a native token to accomplish what you want to accomplish? And is there any functionality to that token? And if the answer is no, in the vast majority of cases it is no, then there is no use for that token, and eventually that token won't have much value. Then you go the VC route.
Right. Okay. There was another question up front here. Yep, go ahead.
Thank you for sharing very useful information. So I and my team is now building up a RegTech project, and we are just focusing on designing the project, but we are now at the time to consider the funding. So I'd like to ask, today I had a conference call with a VC which specialized in investing in digital tokens. But according to one panelist, you said that your venture capital has not yet invested in any digital tokens or ICOs. But on the other hand, the number of these venture capitals would increase. So I would like to know the details of the current trend. And also, one of the members said that we would like to issue the securities tokens to the VC. But is it practical based on your ideas? Based on your experience? So I'm not sure whether the usual VC or fintech VC would get the security tokens instead of the traditional equity for the funding. So, and the question is how to get the channel to these kinds of VCs. Thank you very much.
Okay, so I guess the question, and correct me if I'm wrong, is what type of ICO should you plan out?
Yeah.
Right. So should it be a security token? Should you do a utility token, or should you just straight go for VC? Is that what you're asking? I'm sorry.
Yes, actually, yes. Most of the ICOs are characterized as utility tokens, I think. Otherwise, they would breach the securities law.
Right.
But we dare to issue a security token.
Right.
And comply with the securities law.
Right.
But if we would do the public offering of the security token, this would we had comply with the heavy restrictions. So
Right.
that's why we are thinking to issue the security tokens only to the VCs.
I see. Interesting. Nori, you would like to take that?
Actually, without security token or other token or other blockchain, actually it doesn't matter, I think. From now on, as you can see, we have a huge number of ICs. We cannot see any difference from them. And then if you disclose some white papers or business plan or team member, that's not enough information for investment. From now on, I think before IC, we have to get ready for that, like a product that really works very well before ICO. No one can, from now on, since we have a huge number of ICOs, we can not compete others. So that's why before considering ICO, you should focus on developing a prototype, not prototype, like a mostly
Okay.
service level or product before ICO. Then in that, unless no one cannot succeed to funding ICO from now on.
Okay. Why don't we squeeze one more in here?
Thank you very much.
Thank you, thank you, thank you. See, eeny, meeny, miny, mo. Oh, the gentleman in the front, yeah.
Oh, okay. So, thank you for your talk, and I think we discussed about how to correct fund, and I think there's one more way to correct fund. It is IPO. So after ICO becomes this popular, how it's gonna influence the trend on IPO? Like IPO is going to decrease or blah blah blah. Could you answer my question?
Fantastic question. Who would like to take that one?
Well, I think there are kind of broader trends around the strengths of the traditional public markets. So the activity, for example, in the US on the tech IPO side of things have improved dramatically. If we're thinking specifically ICO to IPO, one project that we are now working on is actually a security token that will be convertible into equity. And that company is actually planning to do proper IPO at a later stage. So I would expect more of these interesting structures to develop. And from that point of view, security tokens are becoming perhaps even more relevant and pronounced. And then also in the US, I see a little bit more companies now going Regulation A+ route, which is effectively a registered public offering, again, for security type tokens, which is that's usually called like a mini IPO. So again, some sort of convergence between the two, or more of a obvious route from ICO to IPO, I do expect to develop.
Thank you very much. I'd like to thank the panelists and thank the audience as well. I saw a few more questions. We can continue it on a one-on-one basis afterwards, but this has been good. Thank you very much.